Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues to edge higher on Tuesday and now challenges the area that expects to see a bearish response around 73.30.40 as the US dollar slides to an intraday low of 92.41. It is assessed that further risk should actually apply to the downside eventually if we see a rejection from there and look back to the support region of 72.85. With that being said, though, if we see a close above 73.30 from a New York tomorrow morning, that is, we would see a possible squeeze towards this top side of the range before a potential reversal, that is around 73.70. The euro edges closer towards the objective of 118.35 as the US dollar, which measures the greenback strength against a basket of six major currencies, slides, as I mentioned, to a 92.41.43 area. As investors look past the US Federal Reserve Chairman Jerome Powell's speech, now turn their attention to the August US non-farm payrolls report released this Friday. US Federal Reserve Chairman said that the central bank would continue to be cautious in its approach to tapering its massive pandemic-era stimulus while reaffirming a steady economic recovery. Based on statements from other US federal officials, a tapering announcement could come as soon as the Fed's September 21-22 meeting. That's the rate decision for next month. Still, Powell said that the central bank has much ground to cover to reach its other goal of maximum employment. With the Jackson Hole meeting now in the rear view, the market is looking to these non-farm job numbers, which foresees a forecast, that is, of 750,000 in job growth and a decline in the unemployment rate of 5.4 to 5.2. If so, then it should see a return in dollar strength, which I do anticipate. I'm still holding the view that the dollar bulls will continue to trek higher and eventually turn this pattern around from euro and see a rejection anywhere from 118.35 to about 118.70. It is quite heavily congested from this region, and therefore, like previously, a good rejection was seen. So any attempts could see a bull trap from this region, and therefore see a reversal back towards the bottom side of the range around 117.60 to 116.75. The dollar yen still remains, I believe, in a technical pattern to a bearish case, with the RSI buckling. That means that could see a further decline. We've got a bearish outside range day and numerous rejections from that 110 figure 20 area. So any attempts should again see this kind of pattern be repeated. And if this does continue to slide further, looking at the RSI, then my call is down towards 109.40 and maybe as a stretch to 108.55. With the UK returning after being absent in observance of the summer bank holiday, the bulls are attempting to push this market higher and closer to that 138.20 resistance. If we see a break above there, then we could see a short squeeze to 138.80. Nevertheless, the MACD is weak and the RSI is picking up momentum, so no doubt we may see another 30-point rise, but it all depends on how strong this level holds out. If we see a rejection, then we look back towards 137.30. In the meantime, sterling yen is still looking at this top side resistance at 151.70. If we see any kind of break above there, we'd see a short squeeze up to 152.30.40. Unfortunately, there is a little to go on in terms of rejection, but seeing this as sort of a straight across resistance and support, could see that rejection come through into tonight. And if so, then I do expect to see a pullback to 150.90 to 150.20.30 as a potential objective. So, as spot gold remains in a relatively bullish bias or mode since the rally on Friday, we are looking still towards that top side of level around 1,830 to 35, where I anticipate a bear ambush, or more to the fact, a bull trap. That would mean the rejection from there could see a tumble, but we do need confirmation to the downside, and that will be around 1,795 to 97. If we see the market take out that level, then I anticipate a further slide down towards 1,784 to maybe 1,770. An interesting pattern's come through on oil. As you can see, it's a bearish dragonfly. The reason why it's bearish is at the top side of the range. Not as close to, not as the pattern would be looked upon as a hanging man, but nevertheless, it's a sign of indecisiveness as the market challenges toward that topside resistance seen somewhere around 69.70 to 70.20. As long as we maintain beneath that or hold there, then I do anticipate a pullback to about 66.5. All eyes look to tomorrow to the OPEC meeting, so it could cause a little bit of volatility into that tomorrow's session. So keep an eye on that top side. And if we do see a rejection, then let's see if we can get that pullback. Well, that's a wrap for today. Thank you very much for joining me. As always, look out for the intro poll. I hope you enjoy the great start today.